I'm going to be making a number of YouTube videos for first-time buyers answering the most common questions first-time buyers have when getting a mortgage in the UK. Of course, if you have your own question and you're a first-time buyer, please feel free to comment below and I'll be more than happy to make a video for you. Now, the question I'll be answering today is how much deposit do you need for a mortgage as a first-time buyer? Now, well, strictly speaking, there is no right or wrong answer to this. There's no golden rule when it comes to how much deposit you need. I'll be going through a couple of scenarios with you now to give you an idea of when you might need a 5% deposit or when you might need a 10 or 15% deposit. The first place to start when answering the question, how much deposit do you need as a first-time buyer, is to really start with the minimum size deposit you may need is 5%. So if you're buying a property worth £200,000, then the minimum deposit you would need is £10,000. However, that may be affected by your credit history. So if you have adverse credit history, you may need a larger deposit. If you're buying a new build flat, for example, again, you may need more than 5%. But in terms of what's the minimum size deposit you may need, it's 5%. One of the main driving factors when it comes to how much deposit you need will be your credit history, which I've just mentioned. Now, if you have a good credit history, so no adverse credit history, you have built up a credit profile, so you've had a credit card, maybe you've used it minimally each month and then paid it off at the end of the month, then you may be looking at needing a minimum of 5% deposit. However, if you have adverse credit history, so you may have CCJs, you may have defaults, missed payments, IVA, bankruptcy, whatever it may be, then that may mean you need a larger deposit. With some lenders, you may need 10% deposit. So if your credit history is maybe 4 or 5 years old, then they may allow you to go in with a 10% deposit. However, if it's more recent, then you'll likely need a 15%, maybe even 20% in certain cases. And obviously, if you're in a position where you need a larger deposit, that can have a big impact. Where you need a 15% deposit, for example, that can have a large impact on what you need as a deposit. So when we looked at that example of £200,000 purchase price, 5% deposit of £10,000, well, if you need a 15% deposit, that would be £30,000. It's obviously a significant larger amount. So if you're a first-time buyer, whether you know you've had adverse credit history in the past or if you think you're absolutely fine, it is paramount that you get an up-to-date credit report produced and get it looked at by a mortgage broker. Firstly, there may be something on the credit report that you weren't expecting and you didn't know that was there. But if you know you do have adverse credit, then the mortgage broker is going to be able to review that and tell you exactly what your circumstances are and how much deposit you will need. So before you go any further, before you start looking at properties and wanting to know what you can borrow, get a credit report produced, get it looked at by a mortgage broker and know exactly where you stand with your credit history. Something else to consider and what might drive what deposit you need is the actual property itself. So if you're buying a new build flat, then it's likely you may need a larger deposit than 5%. You may need 10 or 15%. However, if it's a new build house, then you may be able to use a 5% deposit or 10% deposit. So when you're looking at a property, again, it's worth knowing exactly what deposit you need. But what about a property that needs a bit of work? So some first-time buyers don't always want a property that's ready to go. Some want to put their own stamp on it and maybe do it up. So that leads me on to the next point of actually how much deposit you put into the property. Now, some people will have a very strict deposit they've got to put in. So maybe 5%, they may be 10%, 15%, whatever it may be. But other first-time buyers can be in a fortunate position where they have the minimum deposit they need for the property, but they may have extra where they can decide whether to put in or not. So for those first-time buyers looking for a property to do up, they obviously need the minimum deposit, but they also need extra savings or gift to use to put into the property to do it up. But it can also be the case for someone buying a property that's ready to go, whether it's a new build or a refurbished property. You don't always need to put down all the deposit you have. Sure, it may impact the loan to value. Remember, loan to value goes up 5% each time, so 60%, 65, 70, 75, 80, etc. But it's worth checking with a mortgage broker exactly what deposit you need firstly, so what the minimum deposit required, but also what impact putting down more deposit will make to your monthly payments. You may or may not be surprised by how much difference putting down a larger deposit will make to your monthly payments. So if you're in a position where you can put down more deposit, or put down the minimum, whatever you decide. So it's absolutely worth checking with a mortgage broker, firstly, what the minimum deposit you need to put down and what difference putting down a larger deposit would make to your monthly payments. Obviously, the more money you do put down right at the start as a first-time buyer in your deposit, obviously the smaller the mortgage will be, the less interest you will pay over the term of the mortgage, so the less amount of money you'll pay back to the bank, and potentially the shorter term you can have on the mortgage, which will also therefore impact the interest you pay back as well. So there's a lot to consider when deciding how much deposit to put down, especially if you're in a position where you can put down a minimum deposit or put down a larger amount. When it comes to your deposit as a first-time buyer, another thing to consider is whether someone can gift you a deposit. Obviously, your deposit can come from your savings, but you can also be gifted a deposit from family. So if you haven't already, it may be worth asking if someone is able to gift you a deposit to go towards your property purchase. Now, this has to be a non-refundable gift. They have to have no interest in the property, but it can come from any one of your immediate family. Some lenders will also allow gifts from people outside of your family as long as they have a justified reason for gifting you the money for the purchase. So whether it's only from your savings or whether it's from a gifted deposit or whether it's from savings and a gift, make sure you know what size deposit you and your mortgage broker will be working with. So as you can see, for first-time buyers, when it comes to the question, how much deposit do you need? You can see there is no one golden rule. There's no one size fits all when it comes to what deposit you need. It may be dictated by your credit history. It may be dictated by the property you're buying. Maybe even dictated by how much you actually want to put down as a deposit, how much someone in your family can gift you, just how much you can save. Again, there is no one golden rule. So please be checking with a mortgage broker to find out exactly what size deposit you need for your property purchase. You need to make sure that you know whether you need the minimum size of 5%, 10%, 15%, because like we looked at earlier, it can make a big difference to actually how much deposit you need. So speak to a mortgage broker, find out exactly what size deposit you need. Good luck getting your deposit together, and I'll be back soon with another video for first-time buyers.